Flip the page, it's time to start the game. Graham and Nathan calling out the names.
Morning.
Good morning, everyone. Another Monday has come. I'm always amazed at how fast this keeps happening. It is middle of August. Kids are about to go back to school. What the heck is going on?
Indeed. Morning, Graham. Can't hear you.
Probably help if I unmuted myself.
Well,
That might be the secret to it all.
it's all right. We'll give you, beginner's excuse.
Morning. We've got Jimmy. We've got Sharita. We've got Hank and Brandon. John, hello. Carlos, Emmanuel, Lynn, Cheryl, Catherine, Reisman, Silvana, Pyatt, Denise, Adrian, Thomas, Ron, Art, Des, whole bunch more that I haven't got a chance to name. Excited to have everyone here on another Monday and another relatively quiet weekend. I mentioned on Telegram, it feels like the market has been shockingly quiet now for a couple months. The overnight gaps have been very small. Even the weekend gaps have been very small. We're sitting on 0.006% on the SPY right now, and that's pretty much been the case most of the weekends. Relatively small gaps. I had one big positive one, 3 weeks ago or whatever that was. But compared to the 2% and 3% moves that we were getting intraday and over the weekend, we have really calmed down. And so I'm curious, Graham, I'm starting to think about building a position on the VIX just because I think this can only go so long before we get some kind of riptide through the market where volatility enters back in a big way.
Well, my take is that seasonally, that would be a smart move.
Yeah.
And looking at where we are with the markets, in my opinion, also think that's a smart move. That's a similar reasoning why I put on my QQQ hedge, my insurance play.
Mm-hmm.
Which, if that hits here, that would be pretty ugly for the markets. So hopefully it doesn't.
Yeah.
But same sort of thinking that volatility should ramp back up.
Well, an interesting note on that is that you've talked a lot this year about how seasonally we have mostly maintained the path expected, but we've done it in extremes. So we've gone way higher, way lower. And I wouldn't be surprised if that's the case as well. So like you said, hey, volatility, probably will pick up. Well, maybe it'll pick up as seasonally expected, but 4 times what seasonally has been the average or something like that, which is also kind of top of mind for me in terms of considering building that position. I've got a couple different things in mind. You guys know I'm not a big hedger. I follow the market. I'm bullish when the market's bullish, and right now it certainly is. But there are some things I'm considering doing, whether it's a big kind of pair trade with IWM and SPY, or if I look just to build a position on the VIX and trade everything else, as the systems dictate. I'm going to do something here in the next couple of days. I'm just not 100% sure what I'm going to do, but I will. If you guys are one of my All Access members, what I'll do is I'll post in the All Access Telegram when I do that. So I'll kind of do some trading here and opening and closing playbook, but then I'll put my exact trade so that my All Access members know exactly what I'm doing.
Nice. Nate, I'm going to be curious if in the September with the rate cut meeting, or the interest rate decision, I should call it, because we don't know if it's going to be a cut. I'm curious if it's going to be a sell the news play coming up here over the next month.
Yeah, I don't know. I could see it going either way. That's one of those things where if the IWM stays, let's see where are we at right now. If it stays this far behind, it might try to use it as a catch up trade there for a bit while everything else fades. Still 12% below the highs. So maybe could do the pair trade in that direction if you think the cuts are going to come. Or it could be just the opposite, because I think, the IWM has got some, that's small caps for those of you wondering. So small caps have gotten some momentum They outpaced the S&P by a couple percent since June after being way, way, way behind. I think the reality is they actually probably should be further back than they are if you just look at earnings and sheer volume of the actual revenues and dollars being made. People talk about how the Mag 7 are overextended and things like that. Maybe technically they are because the whole market might be, but actually in reality, they're making exorbitant profits compared to everyone else.
I actually saw a post over the weekend. I probably saved it. I don't remember if I did, but profit margins are the highest they've ever been.
Yeah,
for these
yeah,
companies.
and I mean, I almost don't see any scenario where that doesn't continue going up with AI.
Mhm.
Like I'm in that camp where I almost see zero scenarios where profit margins don't continue getting higher, and the bigger you are and the more robust you are, the better it is.
Unless you want to go down the whole AI doomsday rabbit trail, I can take you down that one.
Well, yeah, but then they're still going to be higher until the robots come for us, right?
Yeah, until the robots come. That's why I tell Carly, I say, we just need to buy the mega cap stocks and hold them forever because they'll just keep getting richer and richer.
Yeah, indeed. Well, we've got some action going on. You wanna take it away?
Yeah, I'll take you guys through. I'm just going to do a quick recap of what we covered Friday because I know not everyone was able to make it. We talked specifically, Nate, about gap fill opportunities. It's not something we talk about very often in here, but they're a really cool market anomaly or phenomenon, if you will, that tend to happen regardless of what's going on in the overall market. So as you guys know, just because if the S&P is up on the day, that doesn't mean every stock is up. Likewise, if the S&P is going down, that doesn't mean every stock is going down. 500 companies within the S&P, different movers, different places, and a gap trade is one of those that tends to work. It defies gravity, if you will, where maybe the markets are going up, but you're trading a gap fill to the downside, and it can still pay even when the markets aren't in your favor. So right now, with all of the uncertainty, I thought that might be a good one to pull out. And I'm hearing that there's no sound. You may need to unmute the page. There's a button on the stream with that little microphone looking thing, or a speaker, I should say. You may need to unmute that if we're getting no sound. So here's some examples that I showed you guys through just so we can lay out the basic principles. There's a few different ways to trade it. And obviously take what you want from here and trade it how you wish. But basically what we're looking for is an overreaction typically to news. In this case, this was Amazon here. This was on earnings. You can see the earnings right here. Gap down. They actually had positive, good earnings, I thought. Stock went down pretty far, 10% overnight. And I would say that's an overreaction to the news. But regardless of my take, let's look at the price action here. So for a gap fill opportunity, we want to see a big gap. Usually 5% or more would be great, just because that gives you a good opportunity in between the middle here. If it's a 2% gap, you can trade it, you can scalp it. But we're looking, specifically for these big opportunities here. So Amazon, overreaction in the news, went lower the next day. For a gap fill, the two ways to trade it are you wait for price to close above the opening price of that gap down day, or you can use the tail. So the high price of that day. So here we got Amazon 3 trading days later, closed above both of those lines. So regardless of which one you used for entry, it would have closed above that. So does everyone see this here? The body closes above both the high price and the open of that day, which would then trigger what we would call a gap fill higher to the upside. Now the gap, again, likewise on the entry, if you want to set a profit target, you can either use the low of the day before the gap or the close of the day before the gap. Obviously, the close is going to be a little bit more aggressive, a little bit more profit opportunity. But either way, we see here, Amazon gaps down, overreaction to the news. Now, this could have faded downwards, and we wouldn't care. We wouldn't be trading it. We only trade or look to enter when we do get that close into the gap area. So enter here on, it looks like the 7th or 8th. I don't have the exact dates down here. And then you would set a profit target either at this tail or here at the closing price, or you could, if you did 2 lots, you could do one profit target here, second profit target here. Either way, it didn't shoot immediately, but you can see here as the time went on, and I believe this was Friday, closed that gap. So when it went up from 220-ish to 230-ish, about a 5% move on Amazon. And if you traded this gap, you made good money here on that move. Same thing for Qualcomm. It's a similar event, earnings, overreaction to the news, pop down. Now, again, if it looked like this forever, it doesn't matter to me. I'm not entering unless we get a close above. Now, if you're trading the tails here, there's not a lot of room to run because they're so close. But if you're just trading the closing prices, the close the day of, and then the open the next day of that gap down, you would see we get an entry here on 8/12, August 12th, just about a week ago, and it has since gone up and filled that gap. Let me take a moment here, make sure this generally makes sense for what I'm talking about with the gap fill. And we did do some trades on Friday as well. So if you want to see what those were and get in on them, you can go back and check out that replay. I'm not going to go through each and every one right now, but enter when it closes within the gap, right at higher with the profit target here at 160, roughly speaking, which it did hit on Friday as we saw. Now, you can also trade gaps to the downside. Same concept, just flip it. So here we have a gap up on Carvana, which you would also call an overreaction to the news, right? A massive gap. Now, again, if it went higher, maybe it wasn't an overreaction. Either way, we're not trading it. But since it went lower the next day and broke through that gap into the gap fill territory, you could then trade puts on Carvana. And again, have a profit target either at the tail or at the close of the gap day. And you can see it came down here on 8/12 and closed that gap. So if you trade puts, I would personally trade debit spreads. You could use a wrap order, or you could use somewhere strikes at the end of the gap or in between the gap for even larger profits if it works out. And in this case, Carvana did fill that gap lower. So they work both to the upside and to the downside as well. All right, so on Friday, I gave you guys 3 active trades for the gap fill, and I'm not 100% sure how they're doing yet today. We'll take a look here in a second. But the first one was Eli Lilly. Can everyone see the entry, why we would have entered Eli Lilly on Friday? And if you don't understand why this would be a gap fill higher, or if there's multiple who don't understand, please let me know in the chat. But you can see here, Lilly on earnings, gap down. We would call that an overreaction to the news. It then came back up, and here on Thursday, made that close above the gap fill, or above the gap lower, excuse me, which means the gap fill is on. So here was us Friday, entering here. Now Lilly is up 0.5% today. Still has a long ways to go to fill this gap. It may not look like much, but that's about $40. So about 5% on this stock. We did a couple trades, Nate. One of them, we did one of them with the target. I'll give you guys the exact strikes here. I did this one very aggressively. The other one's not so aggressive, but I used this week's expiration, and I bought for the aggressive one, bought the 735 strike call, sold the 740, and the max profit if Eli Lilly closes this gap this week would be 650%.
So you did a 5% on 1 week on that one.
Yeah, that was my aggressive play for them. And I did set a target at 256, which was about a 200% return, if I remember correctly.
Nice. Getting aggressive. I love it.
And then we did a safer one on Eli Lilly with the 715, 720 strike call. So like right now, Eli Lilly's at 705. So if it gains another $10 from here, which is not much for that stock, it's up $5 today. That would hit a max profit. And I don't have the exact numbers here. If you guys have them from Friday, feel free to post them in here. Kathy, Lilly moves very slowly. It probably generally may, but when we get increased volatility like this, that's when you see those candle bodies increase as well, and the daily moves increase. We looked at the ATR on Friday too. Another active gap fill here is Shopify, and this one is obviously to the downside, and this one is moving in our direction again. But you can see here, big move up on earnings. It did not enter the gap fill territory until Thursday. You can see here Thursday closed just in the gap fill territory. So Friday, we took this trade with puts, and we did the 19th of September. So even outside of this window, a lot of time for it to fill the gap. We purchased the 130 put and sold the 135 put. And I think I made that. Actually, let me just do this because I'm pretty sure I wrote them down in our trade sheet. That's in the members portal. I'll just post them in here. Just don't pay attention to the debit fills because those will have changed since Friday. But those were the trades we took on Friday if you guys want them. Again, in this case, I think Shopify is set up to close this gap completely. Our strikes were here at 130. So even if it doesn't get all the way to close the gap, as long as it gets pretty close, we should be good. That was a $1.40 net debit. So that gives us what, 300% roughly, maybe 200%. Let me just do the math real quick. A 257% return on investment if Shopify continues to close this gap lower.
Yeah, I like all those. I have to disagree with Kathy. I don't think LLI moves slowly. I think Eli Lilly is a very fast moving stock. Actually, I think the ATR.
I think we looked at the ATR as 20 on Friday.
Well, on a percentage, it's 3.7% right now. So that's like significantly bigger than Apple. It's bigger than AVGO. It's bigger than a lot of tech stocks. So Kathy, I think maybe you have like a little bit of a longer term view up, but Eli Lilly is actually a very fast moving stock, especially relative to the health sector. It's one of those ones. It had an ATR up into like the 4 and 5% there for a while, even in May when some other things were starting to slow down. So it's definitely a pretty quick moving stock. There you go.
ATR on Lilly's 29.7. So pretty big. And it wasn't that much a couple weeks ago, but because of the increased volatility, it has also increased. And the last one here was AMD. This one's a very, very tight gap fill, and I really like AMD stock, so I don't love shorting it. However, we're trading for this gap, right? The gap came up here. We had to close below into that gap fill zone. And then our target, we use the weekly options here. You can see in the chat, I posted them 180, 175 puts, a wrap order here on AMD. And if it closes below 175 by this Friday, what was our entry price? A little over 100% return on investment. AMD is trending in that direction today. It's down to 0.75%. We only need another $1 drop on AMD, and we double our money there. So we do have some questions here. How do we get a screener for this? How do we know which stocks gap up, gap down? I can work on building one for you guys if you'd like. Give me a yes in the chat, and if I get that done here in the near future, I'll upload it to the opening playbook VIP area for free, which again is a whole whopping $1, less than a Big Mac. It's like 1/4 of a Big Mac. So we'll get that done for you guys there. Now, the tricky thing, it's easy to make screeners for gaps and then you manually go just check them each day. The tricky thing is having a gap and then giving it a reasonable time to enter that fill zone in an optimal time. So that will be the trickier part of building that scanner and screener for you guys. But I should be able to get it done for StockFetcher and Thinkorswim for you guys and get it in the portal. And we'll actually take a moment here today just to go cover the members portal and show you guys all of the bonus resources in there as well for you guys. So when I do update and add that screener, that will be in there as well.
Yeah, that's actually a good segue. I was going to show an update to the calculator. Do you want to do that now, or do you want to?
Let me get the two stocks on the watch list real quick, and then you take it from there.
Okay, perfect.
Big Mac's almost $10. Oh, wow. I guess I haven't gone to McDonald's. Actually, went to McDonald's yesterday, fun fact, but haven't ordered a Big Mac in years. All right, watch list. NVO, Novo Nordisk, very similar to Eli Lilly, direct competitor. I told you guys this is one that I put my speculative retirement account into. It has not closed above that gap yet, but you can see here, this was Friday. Today it's at $54. So it's right around here. Right now, a gap fill would be just above this tail here. I would use the tail because it is such an extreme gap. We have a lot of room here, about 20% on the stock. So I don't know the exact, actually, let me just tell you the exact price. The gap fill price to look out for Novo Nordisk is $55.37. So let me just add this in here. $55.37. If it closes above $55.37, you would look to use options, or I would look to use options to trade this to the upside with the target here. Let me give the exact number again. $68.47. $68.47 target. All right.
Wait, so is the Big Mac really $10? That's what I'm stuck on right now. Or is that like an exaggeration?
What'd you say?
Is a Big Mac really $10, or was that an exaggeration? I think that's the most important takeaway from opening playbook so far.
We need some confirmation here.
I need to Google whether it's actually or are we just rounding up aggressively?
Yeah, I did not do options on Novo Nordisk just yet. I will wait to see if it closes within that gap fill range, which would then trigger an entry for me. But right now it's on the watch list for me. Another one here is one of our favorite stocks to talk about, but ANET to the downside. So, and there's an important note here. First off, you can see the gap up. We would be looking for a close below this gap, which the exact price is 133.57. ANET close below 133.87 would be our entry to the downside. Now, keep in mind, on Thursday, it went below that price, but it didn't close below that price. So this would not be a valid entry for me. It would still just be sitting here on the watch list. So again, a close below that price would then trigger a gap fill to the downside with a profit target on the underlying stock of 121.50. 121.50 ANET target. And you just use puts. Again, I preferably, I personally like to use the spreads if I'm going to trade this to the downside, just because I don't have to worry so much about time decay eating up my position. But if you want to trade basic puts, you can short the stock, or you can do the debit spread, which Nate, this is perfect timing now to get over to you.
Yeah.
On what's going on with our calculator.
All right. Let me.
I've entered the vortex. All right.
Let me just show you what I've got. Now, to be perfectly honest, I just deployed this a couple minutes ago. So I need to audit it and make sure we're all good to go, which will only take a couple minutes. But I thought you guys are the opening playbook family. Why not show it to you and give you the sneak peek even before I have it fully audited. So this is our new and improved opening playbook option spread assistant. And what you guys can see here is we've now got debit spreads with a toggle for puts and calls, and we've got credit spreads with a toggle for puts and calls. So we've got basically all four options in there set up. Bullish, put spread, bull put spread, bearish call spread, bullish debit spread, bearish debit spread, all worked in here. We've also added a couple other things that I think are nice. So for example, if I want to go to debit spread, I want to do calls. Graham, what was one of the long gap potential trades you had?
Sorry.
I'll throw one of those in there.
Let me just give you the safe for. Did I do this? Bullish. I only did one bullish. Lily.
Okay. Well, we'll get a big percentage return here. What were those strikes? The buy strike?
Seventh. I'll give you the more aggressive one now, and then if you want to do it again with the more moderately aggressive one, we can. But 735. Okay. And then sold to 740.
Sold 740. So sell call.
Entered for 64 cents.
Oh my gosh.
Yeah.
And how many contracts we want to trade? Let's throw 10 in there. And then custom profit target. You did what'd you say? A couple 100% on that?
I did 256.
As a percentage, or that's what you actually put? The
dollar amount.
Okay.
Oh, as a percentage. Oh man.
Well, I don't know. We'll see. Because normally wow, I nailed it. 300%. I just literally threw in 300% is exactly 256.
Wow. You're a genius.
Wow. I feel like I should get some kind of award for that. Anyway.
Yeah.
So what you can see here, a couple cool things that we added. Number one, we have the hold till expiration value. That's one that Graham wanted up top there. And you see it gives you the max ROI. So if you don't do anything and you just hold this till expiration, I'll talk about what that means here in a second because I got a whole bunch of questions about that. Actually, let me ask the chat before I jump into that. Anyone hold some trades till expiration on Friday and actually go through the process of getting assigned an exercise on Friday, either as a good thing or you were nervous and you've never done that before, or you're still not sure what those broker emails mean that you got over the weekend? Because I got some questions about that, and we'll cover that here in a minute. But that's what this hold till expiration would be. It would be just literally letting it go and letting the broker do the work, assignment and exercising, and that's what the full ROI would be. So then you have the custom target, like Graham set there, and then you have this, which some people asked about. What is the break-even price? Where actually is my real net line in the sand? Now, what I would call the line in the sand.
Do you mind if I jump in real quick? Can you in your? I assume you're using Google Chrome. I'm not sure, but just zoom it in a little bit more.
Yep. How's that?
Perfect. Much better. Thank you.
Okay, so I call the line in the sand the sell strike, right? Because that's the one that I want it to be above for my full profit. But there's also the break-even number, which when you actually do the math on the intrinsic value, you would get a slightly different number. And I thought it was pretty cool that this does it for you, because for Graham's trade, a lot of times we don't realize that the more aggressive the trade is, actually, as it gets toward expiration, you can get a lower value and still be net ahead. Graham, I don't think we almost ever talk about this scenario when we're going through these kind of trades, but that's one of the cool things about your Eli Lilly trade. People are saying, "Oh, geez, getting above 740, that's going to be tough." But actually, if it's 737 on Friday expiration, you should be able to adjust your limit and still make a profit because you only paid the 64 cents for it. So a little bit of a bonus on those more aggressive trades that we don't really talk about very often. But when you have the calculator, you could do that. Now, you could also go here to the credit spread. So a lot of you guys like the credit spreads. I usually use the debits, but a lot of you like the credit spread. And maybe you want to do a credit spread. Maybe you want to, sell the 230 and buy the 225, and you want to get $1 worth of credit. Well, now you can see it'll do all that math for you. That's a 25% trade. If you let those expire worthless, you could set a custom target. You could do a whole bunch of different things there on that credit spread. So debit spread, credit spread, puts and calls on there. I got to go through a couple more audits, just make sure all the calculations and the math are working, but we've got that upgraded for you. And that's just one of the things that are inside the opening playbook VIP for that whopping $1 price that you can get your hands on. So make sure you take advantage. And by the way, guys, we don't put the ticker in here because the ticker doesn't matter. So the ticker doesn't matter, just the structure of the trade itself matters. So just to really simplify it, we don't even include the ticker in this particular calculator, so that whether you're trading with us or anyone else, you just plug the actual strike prices in and what you're paying, and it will do the math for you regardless of what ticker you're on. All right, let me move over because I also wanted to talk about this. Let me see if boom. Aha, there we go. Also wanted to talk about this. So I just asked this question in the chat. I know some people did go through this, and some people sent me some emails because they had never done this before. They're still just trying to get their minds around what actually happens when you let a debit spread go to the point that you get assigned over the weekend. Well, it's Monday, which means some of you may have actually let those trades expire for a full profit, but you're still not really sure what that means. You heard me say, hey, as long as it finishes above the line in the sand, you're good. The broker will, exercise it or assign it. Well, actually, it'll be both. But what does that actually mean? Well, let's go through that fairly quickly here for those of you who are new, and I'll give you a real example just so you're more comfortable with the reality of what's happening here. All right, so remember, anytime we have a debit spread, we have a line in the sand at the sold strike price. So the higher strike price on a debit spread, on a debit call spread, that's what I call your line in the sand. That's the area that has to finish above to get a max profit on the trade. And so this is one that I actually had from the income machine that expired on Friday. I don't know if anyone else had any AVGO from the income machine, but I had one. It was the 275, 280, August 15th debit spread. So, of course, my line in the sand here was 280 on AVGO. And so here's what it looks like if you think about it visually, right? Anything above here, because it's going to expire right here on August 15th, anything in this green box or above is going to be a full profit on AVGO. So price can go sideways, right? It could just grind sideways. It could go up. It could go down a little bit as long as it stays above 280, or it could actually go down a lot and then back up. This is one of the super common questions I get. What happens if early in the trade it drops below your line in the sand? Well, for me, nothing. I don't really care early. I mean, I'd rather it just stay above my line in the sand the whole time. That's great. But if it does drop below and then bounce back, no worries. That's why you use time to your advantage, okay? So all of these scenarios would be a full profit for my AVGO trade. Doesn't matter if it finishes 1 cent above 280 or $100 above 280, you're going to get the full profit. So to manage this situation, we have two basic options. The first one is to set a GTC target on the position. Okay, so that means you go in there and you set your limit order on the position after it gets filled. That's what that debit spread calculator that I just showed you is built for all the opening playbook VIP members. so that you can do the math. You can easily see what your scenarios are and handle that in real time using that calculator. Now, option number 2 is to let the trade expire. Okay, so to let it expire above 280. Now, since AVGO was a more conservative trade, I wanted to let it expire for a full profit. In other words, I didn't have a lot of meat on the bone, right? It's not like I was trading a wrap order where I could go for a much lower target and still make good money. Here, my max profit was only like 15%. So I wanted to let it expire, and I wanted to go for that full 15%, which means if it expires above the line in the sand, some things are going to happen in your account. The broker will assign you the short side of the trade automatically. That's the top, the sell side. They're going to assign you automatically, which in this case means I'm required to sell shares of AVGO at a price of $280, right? That's what assigning me with the short side actually means, that I need to now sell shares of AVGO at $280. How many shares do I need to sell? Well, it's the amount of sold contracts times 100 shares. So if I have 1 contract, it means I need to sell 100 shares. If I have 5 contracts, it means I need to sell 500 shares. If I had 100 contracts, it means I need to sell 10,000 shares. Then the broker will automatically exercise the long calls. That's the bottom ones, right? So it's going to assign the short ones, and then it's going to exercise the long ones, which in this case means buying shares of AVGO at $275 per share, right? How many shares? Well, same thing. The amount of contracts, not sold, bought. Of course, I didn't update my math. The amount of bought contracts times 100. So then we just do the math. If I am required to buy shares at 275 and then sell them at 280, what happens? Someone in the chat, one of you math geniuses, tell me what happens. The broker exercised me at 275, which means I'm required now to buy shares at 275, and it assigned me the short at 280, which means that I am required to sell shares at 280. So what actually happens in that situation? Yep, you guys are right. We are then going to make $5 per share or $500 per contract. Okay, now that's the total value, right? Then the question is, well, what did you pay for it? In this case, I think I paid $4 or so. So I'm going to make $100 net, or 25% net return. And since that AVGO did finish safely above my line in the sand on Friday, if you guys were holding this one, finished comfortably $20, $25 above that line in the sand, that's precisely what happened. I had 2 contracts, so I got 2 contracts assigned, 280. So that means I needed to short those. 2 contracts exercised at 275, which meant I needed to buy AVGO at 275, and then I needed to sell AVGO at 280, and exactly what all of you guys said. That means I made $5 less whatever I paid for it to open up the trade to begin with. Okay, so some common questions. Do I have to wait for it to expire? No, you don't have to. You don't have to wait for it to expire. You can set a GTC limit order, and you could even use the calculator that we just talked about. Do I have to have the capital in my account to cover? See, this is one of the annoying things about the brokers. Look at what Schwab says. It says, let me see. Where does it say it? Oh, please review your account to determine if you have enough equity to support the assignment of these options. See, the broker is kind of stupid. It doesn't even do any basic check to see that you're in a spread, the other side. It doesn't say something like, hey, we're automatically exercising the other side, no action required. You would think in the age of 2025 with some simple logic and AI, Schwab would be able to tell me, hey, we know that you have the other side, so you're all good here, nothing required. But no, they're kind of dumb. They look at it at one side and they put a message in here that says, check to see if you have enough equity to support the position. Well, for a lot of people, that kind of makes you freak out because you're like, wait a minute. What if I have 10 contracts on a $5,000 account? I don't have enough equity to be short 40 grand or 30 grand or whatever the position might be. But in reality, that doesn't really matter. As far as I'm aware, no modern brokerage requires you to have the capital if you're exercising and assigning at the same time. Now, there might be some brokers that do, just none that I'm aware of. I've been assigned on Robinhood, on Tasty, on Schwab, on most brokerages. As long as I have the other side, I think I was assigned like almost $1 million in Tesla once on like a $6,000 account. But I had the other side, so they didn't actually matter. But there could be some brokerages, so obviously you should be careful, do your due diligence, just make sure. But every broker I'm aware of will assign and exercise automatically, and it should not matter if you have the amount as long as you have both sides in the money, right? So as long as it expires above both strike prices, it should not matter. Okay, are there any fees from the broker? The answer is typically there are some fees from the exchange and the broker. A lot of brokers will charge zero fees, but there's still an exchange fee. So make sure you ask. There could also be some margin fees because you're borrowing the money for a fraction of a time. And so the real answer here is do the math. See if it's cheaper for you to get out at 98 cents or to exercise at the full dollar. It might actually be more profitable for you to get out at 98 cents than it is for you to get the full dollar if there are some fees. Desert, what I mean by having the other side is that you have both sides. So see here on this image, I got assigned short and I got exercised long because I had the buy and the sell on the AVGO call option. So as long as I have both, it doesn't matter. But if you only have one, well, then you might be in trouble and you have to manage that more carefully. Okay, so again, there could be some fees, almost certainly will be some exchange fees, and your broker might charge some additional fee. I think Tasty Trade charges like $5 to exercise or something like that. So those are some things to keep in mind. Adrian, I don't have a fee calculator because I don't know what it is for each brokerage. I guess you could manually add it in if you wanted to, and we could give you that option. So there's just a couple things to keep in mind. Hopefully that helps just kind of the practical side of what it means when you exercise, or when you let it expire and get exercise. No big deal as long as it's above both strikes. And that's the thing to keep in mind. If it's between strikes, then I always recommend getting out manually, updating your limit order, getting out manually before the trade expires, because that's the risk, right? If it expires between those two strike prices, then you're not going to get both of those messages I showed you from Schwab. You're only going to get one, which means that you were assigned shares. All right. That's it for my spiel on getting assigned for those debit spreads, which, like I said, hopefully will be a good thing.
Awesome. Let's see. Any last questions there? Feel free to post them in the chat. I'm just going to do a quick walkthrough of what's coming up this week, and I apologize for the ads on this site. They're sometimes annoying. They're always annoying. I'm a visual learner, so anytime I see something moving, I can't focus on anything else other than Caitlin Clark over here shooting buckets.
Oh, by the way, Graham, I meant to mention something real quick. That T-Mobile trade we took that doesn't expire until October 17th is already up 22%.
Wow.
That's another thing we kind of underplay with debit spreads that I think is really cool, is that even if you're longer term, the way that debit spreads are priced is very consistent 2 months out, 3 months out, 4 months out. So if you move up like 1 or 2%, you'll actually get a really early ROI on your trade, even if you have a relatively long dated debit spread. So just one other kind of sneaky advantage of trading that way. I was pretty amazed at that T-Mobile trade that's, again, 260, 270 and all the way out to October, already up 22%. So great job for those of you who have it. I know a couple people in the chat already mentioned that they did have it.
I don't know how I missed it. I didn't get it.
Oh, I think you were off on closing playbook.
Oh, you see what happens when you miss the closing playbook?
Hey, before Graham jumps into what he was going to go over, Nathan, there's a question that popped up in the chat that I've gotten a few times recently that maybe it's worth covering for a minute. Just a question about like it expiring over the weekend, and like none of the expiration dates are actually weekend expiration dates. They don't have to worry about getting assigned over the weekend and having to put in an order to get out of it over the weekend.
Yeah, so the way the brokers work is that the contract expires Friday at 4 p.m., but the assignments, the brokers are clearing their books over the weekend. So that they're not actually, it's not because of where the price is at the weekend. It's always based on where the price was on Friday at 4 p.m. It's just that they're then clearing their books over the weekend, and sometimes you'll get it on Sunday night or early Monday morning. So there's nothing that you're going to change or that's going to happen because of Sunday night or where the market's moving over the weekend. That's just when those notifications are going to come. It's a good question. Some people think, oh, shoot, something happened over the weekend. No, it was not about something happening over the weekend. It's just about, when they actually get their books cleared and do their updates.
Cool. Costa, I don't think we did a Reddit trade in here, did we?
You actually mentioned Reddit a while ago. What was that for? I certainly wish we did a Reddit trade.
Well,
I almost traded during the earnings. I told everyone it's a no-brainer buy on the earnings. Talked about how it will probably match what Netflix did, have really good earnings after they monetized, all that kind of stuff. And then, like an idiot, never actually took any trades on it. And I think since earnings, it's up like 80% or something insane. Of course, I owned like over $100,000 worth of Reddit and sold it about $110. So I'm feeling really great as it's over $240 a share right now.
Yeah, I don't think we did any puts in here on Reddit. It might be someone else. One of the other traders did that. I'm not sure.
We definitely didn't do it in like opening or closing playbook.
All right, cool. All right, just for a quick overview of what's coming up this week on the economic news. Again, I'll do a full deep dive tomorrow at 10 a.m. I'll give you my full market outlook as well. Very flat day today. I mean, look at the S&P 500. You can see it moved a whole 0% today, which, Nate, hopefully even with the 0% move, that ends up good for your weekend trade, even with most investors getting nothing. But we'll see what happens there. Big week this week as the Fed is meeting, Jackson Hole meetings, figuring out what they're going to do next for interest rates. We've got Fed members speaking pretty much all week. So Bostic, the Jackson Hole symposium on Thursday after market close. Fed Chair Powell speaks Friday at 10 a.m. right in the morning to give us some nice morning market volatility. Outside of that, I'm just going to filter this up. And this is investing.com economic calendar. It's a cool little tool. Let me just see what's on the 3-star list, meaning the most important. Not a ton outside of the Fed members speaking. So obviously the meeting minutes on Wednesday at 2 p.m. Jobless claims on Thursday. I think this will be a pretty big one since this is something that the Fed has made it very clear that they are watching the jobs market very closely. I came across some news that may suggest even bigger than a 1/4 point rate cut coming up, but we'll see what happens. I don't want to get too excited. I doubt that will happen, but they do have their eyes on this report very closely. So a weak jobless claim, or a worse than expected for the economy report here would hint to further rate cuts versus a very strong report here would probably confuse the markets a little bit and the Fed as well with what they're going to do on rate cuts. And then again, to cap off the week, we have Powell speaking for us. So not a ton of huge news this week, but a lot going on behind the scenes with the Fed, as that has become probably maybe the now that the tariff news has kind of hit the background a little bit. I mean, we're seeing the tariff deals not even moving the markets anymore. The Fed news is now becoming the major mover in the spotlight right now. So definitely a lot of little nuggets and breadcrumbs to happen this week. I'll cover more tomorrow morning at the 10 a.m. opening playbook session. Now, I know we wanted to take a moment here and just cover the members portal one more time. We did this about once a month just to show you guys what all is available for you guys in the members area. And
Graham, as you're getting into that, so you're shifting a little bit toward, you think that the cuts could be more of a sell the news than a kind of squeeze higher catalyst?
I think a 1/4 point cut would be a sell the news.
Okay.
I think a surprise 0.5% cut would be a potential buy the news. However, if you look historically speaking, and as we get closer to this, I will show you guys charts. Typically, rate cuts are not a good thing. Again, my analogy, and I apologize, football is the only sport I really watch, so it's the only one I can make great analogies for, is if you have 8 cortisone shots in the bag and you got Patrick Mahomes, you don't want to use it when he's healthy. You want to use it when he's starting to feel some pain. Same way in the economy, in my opinion. If you're the Fed, you don't want to use our steroids here when the market's healthy. You want to use it when we're starting to feel some pain, which typically hitting the cortisone when pain is coming means more pain is on the way. But let's not worry about that just yet. We'll worry about that when the time is right. But that's why I think we may be entering a sell the news environment. Now, a 0.5% cut may shock and stimulate the economy. But again, let's not worry about that just yet.
Okay, fair enough.
All right. Inside the opening playbook members portal. Again, let me just walk you through this here. So if you have it, you know all of the assets available to you. If you don't have it, it's $1. We had to charge something, so we made it $1 for lifetime. And it's not going up in price that I'm aware of. But hey, I would definitely lock it in now. Recordings right here where you can go access all of the previous recordings. This should take you to the YouTube link with the playlist of recordings. So like I said, if you want to catch Friday's trades, go back and check the recordings. Here's just the trade entries. And again, we do our best here. This is not one of our premium services. This is a free service we do. So obviously it's not going to get the same level of attention as our paid services. However, we do want to keep you guys updated. So we just made a nice basic sheet here that we've embedded in the members portal where you can go back and review some of the trades we've taken in the classes. So if you miss them, you can go back. So here was the gap trades that we did on Friday. Additionally, a lot of you guys like to track your trades, and I think that's a great idea. We put in here a template trade tracker for you guys. Now, this is view only for you all. So just come in here to file and make a copy and then name it whatever you want. And then what I would suggest, again, you can put all of your trades on this, and it's got the formulas in here as well for percent change, days held. You can put the number of contracts you've traded in here, and it should calculate P&L for you. Obviously, guys, we're not going to calculate your commission for you. You can do that yourself. Now, you can track all of your trades on this trade tracker, or what I would suggest is come down here to the right, or to the bottom left, excuse me, right-click it, duplicate this tab, and then you could put overnight options here. You can put perfect income here, and so on and so forth, where then you can track each of your individual strategies separately versus bulking them all in together, where it can be a little bit confusing to sparse them apart. So that is in there as well for you guys. Slide decks in here is just a Google Doc like this, a link to the slide decks that we go over. Again, not every day do we have a full slide deck for you guys, but like on my Tuesday sessions, I'll post that Tuesday deck in there. It's about 50 slides of just a lot of market information in there. So you can go back, review it, take screenshots, download it, take notes, all sorts of good stuff. All right, we're going to scroll down here a little bit. And here you can see the calculator bucket. Now, I've individually put in spreadsheet calculators. This is what I did with my programs about 2 years ago. Made them for you guys. These are going to get removed simply because Nate has now made the better version, which he just covered for you guys in detail. So this does everything that my spreadsheets would do, and it's all in one place. Much prettier looking, Nate. Congratulations on that. So this is the calculator you want to be using going forward, because the other two, the spreadsheet ones, they can be a little bit finicky. Sometimes they go offline. We're going to take those off the members portal. This one is the all one-stop shop for you guys with this calculator here.
And by the way, on that, guys, I did just literally deploy, did a quick update. So if you see any calculations that need cleaned up or any text that needs cleaned up, just shoot me an email. Let me know. I'm going to do another audit of it here today. But, there's 25 little inputs there that I might scan and miss. So if there's anything like, oh, hey, it did this backwards or anything, let me know. Obviously, I want to make sure that's totally up to date and rock solid.
Yeah. And Rob, can it be detached from the website? Yeah, it's on its own web page. So you can get it on your own webpage, bookmark it, all sorts of good stuff. Down here in the options training, we put in 3 of our main master classes. 3 things that you should all review and know if you want to be a proficient trader with us here on the opening playbook. The wrap order masterclass is my way of trading where we're just wrapping the price of a stock with 2 strikes where it barely has to move, and we go for a double on our investment, 100% return each week, or depending on your expiration. That's right there. The jump trades is going to be a little bit out of the money. So on a move higher on a stock, how to get 200, 300% return on investment with the debit spreads. And then the automated options masterclass is going to show you how we use those good till canceled targets. So sometimes, like with my wrap orders and perfect income, I like to hold them through expiration for that max value. But other times, like my Eli Lilly trade, which is a little bit more speculative, maybe we want to book some profits early. This masterclass right here is going to walk you through how to set up those trades, how to manage them, actually how to set it up so you don't have to manage it. That's the beautiful thing of it, but that's all in there for you. Again, if you are newer to opening playbook, or actually on Friday, we had a lot of folks saying, can you please go over the wrap order? Can you please go over debit spreads? Guys, this is already done for you in here. So take today, jump into the options trading area. You can start with any of these two. I would probably say start with the wrap order class, then go to jump trades, then go to automated options. But again, just go through those so that you can start following along with the trades we're taking here, and they'll make a lot more sense. And you'll probably have a little bit of a light bulb moment, an eye-opening moment of how powerful these are and why we basically ditched basic calls and puts to trade this way. We've been doing this for many years, over a decade now. And I've traded anything you can imagine. And this is the bread and butter. I'm just telling you right now, fast track 10 years of experience, jump right into here. This is a gold mine of training for you guys. If you scroll lower, I'm going to go all the way down here. Obviously, you want to be in my Telegram. You want to be in Nate's Telegram. We post all sorts of market information, little nuggets for you guys along the way. Our trade alerts go in there as well. And the starting now emails for the opening playbook, the Telegram post, so that every morning, 10 a.m., you get the notification. Every at 3:30 when we're doing the closing playbook, you get the notification. But next to it right here, and I really want to highlight this for you guys, this is a huge, huge, huge resource, not nearly used enough. This is our customer service live. It takes you right to Zoom. So obviously, if you have questions, you can call in and speak to someone on the phone for customer service. However, we have a much better alternative for you guys too. If you want technical trading questions, if you want to be walked through indicators, how to install indicators, how to use the dashboards, how to take the trades. This right here, every single day, Monday through Friday, 10 a.m. to 1 p.m. Eastern, we've got Cam and Gustavo on there waiting for you guys to join their Zoom room, ask your question, and they will walk you through it live in a Zoom room where you can see screen. They can visually see it as they're talking to you as well, versus on a phone, it can be hard because you're only hearing the audio. You're not seeing it actually happen. This customer service live room is the place to go for any trading technical questions you may have, or again, install for indicators, all sorts of good stuff there, live every day from 10 a.m. to 1 p.m. Eastern. So please, please, please use that resource if you guys have questions. We have 500 plus people here in the opening playbook each morning. We can't answer everyone's individual questions. They will be able to help you out immensely here. All right. Down here, let's see what this is. Additional resources. We just like to throw bonus information in here. Oh, the dream portfolio. We'll do one of those again if the markets do see a deeper correction here. But here are some of the resources I use for building out that Tuesday class of the Fear and Greed Index. You can click there. It takes you right to it. So you can see what I'm seeing. You can see all the data and the internals. Economic calendar. That's where I just was. Walking you guys through what's coming up this week. This is it. That's the link there. Click the wrong tab. Stocks over a 50-day moving average, 200-day moving average. Just a little extra nuggets here. How to trade debit spreads, as well as a bonus training. That could be one to go through after you finish those other three. But let me scroll up here. This is a really cool part, and a part that we'll continue building out. Again, this is not a premium service. All of our premium products, they're much more expensive than $1. We give them all of our full attention and detail. However, we like to give you guys as much value as possible here in the opening playbook. So this is another area where you can get extra value. When we build scanners, when we build screeners, we will post them in here. Sometimes we'll do bonus indicators. So you can go in here and you can see, for example, Stock Fetcher strength code. You can take this and copy and paste it into Stock Fetcher yourself. You can see the exact same thing I'm seeing with sector strength each and every week. Of course, I cover this each and every Tuesday, but say it's Thursday and you want to check. Take this code, guys. We could charge money for it. We don't. It's included with the VIP membership to the opening playbook. The bullish money flows, the bearish money flows. We do these at the beginning of the month. Typically at the beginning of the quarter is more powerful, but these are Thinkorswim screeners built for you. So I'll just click it. You can see the manual or the quick start short link for Thinkorswim. Again, if you want to manually install it, I give you the exact code. We're not hiding anything from you guys. We're giving you as much as we can. Here's a fade trade scanner. Don't have time to go through all of that here, but when we do the training, I will walk you through it. I'll give you the scanner. You can take it and run with it yourself. This is where I'll update and add the gap fill scanners as well. Again, we should probably be charging a lot more for them. I'm sure that it would be highly suggested and recommended, We just want to provide value as much as possible here for you guys. So there's additional resource in here for you guys as well. Again, all $1. So I think I covered everything in here.
Yeah, it's pretty awesome. I mean, obviously, I'm sure most of the people in here are already members, and we're thankful that you guys are. I know that that's probably one of the things we've gotten the best feedback on is just the simple $1 service where people have a lot of our resources. I think that how to trade debit spreads class is one of the most important ones to start with, but there's a lot of other good ones in there. Graham, we also got a question from John G, who said, what is your recommendation when the economy enters the concussion protocol?
We'll cover that when we get there. We don't have enough time here. We got about 5 minutes left. But when we get closer, I will show you what I'm doing and how I'm trading it. Nate, actually, and John, and I know this is I should be talking about myself and how great I am, but Nate, I just want to take a moment and say how great your programs are for trading that concussion protocol with the profit pairs and the two-way options. Both have been amazing in this run up, but that's honestly how I would look to approach a much more volatile, uncertain market where we could see a deeper recession, where you do have positions both ways, up and down, where as long as it moves, it pays. That's what I would probably lean towards, the two-way options or the jump or the profit pairs methodology for seeing returns in a downtrending market. And the reason I like that, Nate, is because the markets fall so fast. So obviously it makes sense you can get paid when you have a position set to the downside. But typically, think of the tariff crash we just had. Think of the COVID crash. Think of 2008. When the bottom hits, what happens? Do we normally get stuck there for a couple months where we're just chugging along at the bottom? No, we see the same sort of price action happen to the upside. So that volatility that was going so hard to the downside hits, and then all of a sudden it flips and goes to the upside. That's why those two sorts of strategies can be very, very valuable for those times.
Yeah. Well, like you said, I mean, the beautiful thing about opening playbook and closing playbook is that we're live every day. So in very real time, as the market shifts, we can cover those kind of strategies, what we're doing, how we're shifting, and you guys can be with us every step of the way. So we don't have to forecast and say, hey, if this happens, do this. And if this happens, I mean, we'll literally be covering it in real time as part of opening and closing playbook. A couple things that I'm looking forward to in the coming weeks, folks. Well, first of all, I've got a Sunday night session with Graham that I can't wait for. That's going to be members only, though. Actually, I think, Graham, we're going to let people sneak into that session, even if they're just an opening playbook VIP member, right? Do we just say that?
As long as they have it, we're going to run it through the one-click trading area. Okay. So you have to have a membership, either mine or Nate's, but it's going to be members only, yes. So if you have an
Sunday night, Graham and I are going live. I'm gonna do the preview of some things I'm working on and a lot of other cool stuff. And it was kind of like a, premium members only, but we thought, well, let's just let anyone sneak in as long as they have a membership. So you can actually sneak in Sunday night, even if you're just a $1 member, kind of a cheat code into that session. I've also got that like portfolio trading plan lesson that I'm working on that I'm pretty excited. Even though, maybe you follow that into quote unquote boring, where it's really just gonna be about trade management, money management, compounding, and not like super sexy 300% winning trades. It might be one of the more valuable things that we ever do in these opening playbook, closing playbook sessions. So I'm looking forward to that. I've also got a bonus scanner that I put together for some notes, or I'm starting to put together from some notes that we covered a couple weeks ago. And then we've got that pair trade idea that I think I'm going to end up working with Silas, Graham, to put some analysis together on small caps and large caps and put that on. And so, just a lot of good stuff here that I think will be in the coming weeks. And hopefully everyone is staying tuned for opening and closing playbook every day and doesn't miss a single one.
Yeah, no, definitely. I hope you guys are really enjoying it, having a great time. And Dave here in the chat asked, am I posting a pick for perfect income? And you teed me up, Dave, because I was just going to talk about that. Each and every Monday, we talked about the wrap orders and how they're awesome way to target 100%, a double on your money. And I really do mean 100% return on your risk at stake from a very tiny move in a stock. A lot of the times we need a 0.5% move in a stock to double our money or more. I mean, it could go up 1%, 2%, doesn't matter. So what I'm doing there is I'm taking strong stocks, running it through my methods and formulas to see which stock has a good chance of just drifting higher that week. You use basic call options, you lose. I think that's a sucker's game. But with what we're doing with the dollar options, with the perfect income trade, we're using a wrap order where we can go for double our money, even on a small move in a stock. So if I put in $100, I'm going to walk away at the end of the week with 200 if it barely moves higher. Again, let me know if you know. I always say this to you guys. If you know a place where you can double your money when a stock gains 0.5%, please let me know. This is the only way to do it. We will have a new trade here in the coming hour, and we are going to give folks a chance to jump in on that right now. Dave, I believe you've got the dollar options training up and ready to roll for you guys. If you guys do want to get on that.
Before we jump into that, if I could just real quick, just a couple quick things that a bunch of people are asking, so I just want to cover them real quick. One is if you're looking to get into that $1 membership, I've posted it several times, but we have so many people in the room, their comments just keep pushing my post up. And if I pin it, it's not a clickable link. So just if you're looking to get into the dollar membership, just scroll up. You'll see my post. It says OP membership for $1. The link's there 3, 4, 5 times. That's how you can get in there. Once you do that, you'll get an email to welcome you to the members area. Unless you're already a member of one of Nate's or Graham's programs, then you already have access to the members area. Once you purchase, you can just go into the members area, and within a couple minutes, you'll have access to Opening Playbook. But Opening Playbook and the toolbox are two different things. So everybody gets this little thing called the toolbox when they go to the members area. This is separate from that. You have to look for Opening Playbook at the top to get access to that. And then also a couple people were asking about, Nate, you're doing an income machine for members only, but income machine class later, correct?
Yep, that's at 2 p.m. So we'll do that. You'll get an update in your one-click training portal for that.
Yeah. Okay, cool. All right.
Cool. And by the way, guys, one of the things, Graham, I feel like this is always one of the things that's underplayed about it. It's not just that you're getting a tiny move in a stock for 100%, but you can actually just do it on good stocks. Like the idea that you don't have to trade a crappy stock to get those kind of odds, but you can do it on the best stocks that are already moving up is probably actually my favorite part of the whole thing, because it feels unfair that you could trade a stock that's proven to go up and then it only needs to go up a little bit and you still make 100%. It's like a broken game at a casino in my mind, and I think your profit factor and everything would dictate that. It doesn't mean you're guaranteed to win. You guys know all the disclaimer drills about that. But it's just, I think one of the reasons that track record is so unbelievably good. So yeah, let's cue that up. Guys, new trade coming here in a minute. So take advantage of that if you are not already trading the perfect, dollar trades?
Dollar options.
Yeah. Dollar options? Yeah, I can't even remember. So take advantage of that if you're not already.